KPMG has published a report entitled Doing Deals in Sub-Saharan Africa, which addresses burning issues relating to the latest trends in insights on the mergers and acquisitions landscape in Sub-Saharan Africa. According to the report, energy, mining and utilities sectors saw the highest aggregate deal value last year of $7.8 billion. The sector also recorded the region's highest deal volume at 96 deals in 222, making the total for the year 2021. Joining me now to discuss this further is Ijeoma Ezigbo. She is the partner and head of transaction services at KPMG West Africa. Madam, good morning. Great to have you.
Good morning. Thank you.
I love deals when I hear the news, so I'm a game for M&A. So, give me an overview of these M&A deals by region. What's the summary of this report? What does it reveal?
So the report was very interesting. It was quite an interesting year for M&A activities in 2022. We had, as you mentioned, 297 total deals across the different regions. Nigeria was second to South Africa. South Africa led 50% of the deals, both in volume and value terms, quite interestingly. But Nigeria was a close second. Kenya did extremely well in terms of the volume of deals, but less in terms of the value of deals. One of the things that we noticed is that while the number of deals increased significantly from prior year, about 20% increase from prior year, we had a significant dip in the value of deals. And this is quite relatable considering that we had significant dip in our currencies, depreciations across the region, which led to cheaper asset valuations.
Interesting across regions when we look at this, but the major drivers of M&A in Africa, what is it really?
So I would say three things, and I think I will keep it at the top three. The first for us continues to be the fact that, we have a growing population in the region. Africa is home to the third highest population in Africa, next to India and China. So that continues to be a pool for investors because of just the sheer size of the market. And a youthful population also. We have 97% of the African population under 64 years old. So that's a good demographic for anybody seeking to invest in this market. The next is that the continent is blessed with abundance of natural resources, which is why you are seeing a lot of investments going into the energy, mining, and utilities sector. And the sector constituted of 40% of deals value and 20% of volume of deals.
I'm surprised about this because I was thinking fintech or finance will still be leading, but it looks like the mining and the rest are looking to make some of these deals.
Yeah, so financial services was second, next to energy, mining, and utilities. So a close second at that. It contributed about, I think, 51 deals in total in that particular sector. We are seeing quite a lot of investments, especially in Nigeria, going into fintech.
Mining and energy. That's interesting. What's driving that?
It's really the presence of natural resources in Africa and the potential for growth. So you see, Africa, we haven't quite harnessed our natural resources to
gas, hydrocarbon, nitrogen, whatever.
Yeah. Africa is home to 30% of mineral reserves, 12% of oil and gas, 12% of oil reserves, and 8% of gas reserves. Very much at the developmental stage. So there's still significant opportunity to harness our resources, albeit the need for us to get the regulation in that sector very
energy sector.
very, very clear so
because
that we can attract investments.
Everything is energy is everything.
Absolutely, energy is everything. Yes, it drives significant investment in other sectors also. We can see the issues we have around energy stability, power stability in Nigeria. Is a good investment, is a good sector for potential investors.
You think we're just still scratching the surface?
We are still scratching the surface.
Potential is concerned for energy and mining.
Absolutely, we're still scratching the surface, and now we're talking about energy transition, so we're still scratching the surface. When you look at investments with respect to especially Nigeria, you see that we are still scratching the surface. When you look at the PIA, one of the things that we expected that the regulation would do when it comes to petroleum industry act was to accelerate investments in that region. But we can see we're still grappling with the implementation of that PIA. So one of the things that I believe that we need to do to harness investments in that space will really be regulation. When you also look at the mining sector, a lot of mining is done in northern Nigeria where you're having security challenges. How do we deal with those security challenges to attract investments, not just in capital, but investments in technology, investment in experience, technical competencies from people who have experience running those sort of facilities in other countries to come into Nigeria.
Maybe within the value chain as well.
Yes,
maybe
absolutely.
Perhaps you can do a little bit of value addition instead of just shipping them abroad. Maybe that's what the new administration is trying to look at right now. Put some beneficiation in that. We can do gold processing here rather than just taking it out, so we could create more jobs there. But if folks want to do business in Africa, they want to do M&A. What are the challenges here, basically?
So the key challenge continues to be the macroeconomic headwinds. Very, very strong challenge. And now we're adding the macroeconomic headwinds, we're adding political risks to the macroeconomic headwinds. So if you look at the level of inflation across the region, South Africa is still single digit but accelerating. Nigeria and Ghana not doing very well in West Africa. Nigeria is at 40-something% and Nigeria is close to 27%.
Kenya is also hurting.
Kenya is also hurting, but hurting less. Exchange rates, and Kenya more so, they have inflation at least a bit under control. It's trending downwards. But the macroeconomic headwinds, inflation, currency depreciations in the region,
and fiscal
uncertainty,
imbalance,
fiscal imbalance, volatility. I heard the last conversations we were having with Chike and Bono around the task of this Presidential Committee on Fiscal Policy and Tax Reforms. That's another area that we expect that if we get it right, we're able to attract investment. So the first area continues to be macroeconomic and closely related political risks. The second area is around lack of transparency. So you see, when investors want to make investments in the country, there's still issues around lack of transparency, around documentation, financial information available for the diligence, which is really the point at which they have to evaluate the transaction and price the deals. There's still a lot of lack of transparency in that area.
Currency risk, for example, but I'm sure that's an issue. And the length of transactions, because again, if you want to make deals, M&A, and perhaps you're working on that in January this year, and by now, I'm sure the exchange rate would have either moved, against your favor if you're trying to do an M&A.
Absolutely. So currency risk ties more closely to the macro. So you have the currency risk, the inflation. The volatility in that area is the challenge, because even if the currency is depreciating, for as long as it's not so volatile, like you mentioned, 40% depreciation between the beginning of the year and as at this time, very, very volatile. So that's a big issue. But the issue is when you have crossed the hurdle of currency risk, you have agreed evaluation in Naira terms, which is one way you can hedge the currency risk.
Okay,
for
so
example,
you can go local currency.
Yes, you can go local currency in your pricing and be able to hedge the volatility. But then when you have crossed that point and you've agreed some sort of heads of terms and term sheets and want to progress to doing the deal itself, you still have issues around transparency in the financial information that businesses provide
on the table.
On the table for especially the international investors. So sometimes you go to do a deal and you're just not sure how the numbers are stacking up. So for us, the issues around governance in these businesses, the issue of around financial reporting, the strength of the financial reporting process and systems, exactly the strength of the disclosure. Now, of course, the real strength of our audit and financial reporting processes should enable us drive a lot of transparency, not just at the federal government level, but also at the public companies. When you look at 70% of the transactions happening in Africa are going into private companies. How do we ensure that these private companies have the right governance at the different stages to be able to drive transparency in their financial reporting, and of course drive the much needed investment to scale?
You think all of this will make M&A a lot more easier in Africa? In what other sectors do you think we can ramp up on M&A, for example? You talk about mining, energy and all that, but I see a lot of deals last year, 2 years ago, within the banking sector, for example, for banks from East Africa, Kenya, all the way down to DR Congo and elsewhere. Do you think the financial services still has a lot of space?
Yes. So
Nigerian, for example, Access Bank, if I want to mention some names, do some deals in East Africa as well.
Absolutely. And Nigeria, we've supported Access Bank in their Pan-African expansion.
Oh, great.
We expect that we'll see more Nigerian banks try to take advantage of the intra-Africa trade initiatives. We know the African Continental Free Trade Agreement is on the table. Yeah. We expect that should be implemented a bit faster than we see it happening now. With that initiative on the table, we expect to see more companies, including the banks, expand the activities and the operations into the rest of Africa. So we will see quite a bit of that happening with Nigerian banks. I mean, Nigerian banks dominate the region today. Yes. So we see a lot of that happening. So, Access Bank, for example, has gone into Kenya, they've gone into South Africa, they've gone into Botswana, etc. So we expect that some more banks will follow suit. Fidelity has recently made an acquisition in UK,
yes.
and so we expect to see more of that. But one sector that we're also betting on is healthcare, pharmaceutical and healthcare. With the issues that we have had with COVID and the realization of the sub-Saharan Africa region around that sector, a lot that IFC is also doing in this market to be able to drive production of raw materials that will support the pharmaceutical sector, we expect to see quite a bit of investment.
I'd like to see that in the pharma sector.
Absolutely. But another sector is the consumer. I would always take a bet on fast-moving consumer goods. I believe that these are the engine room for the economy. When you look at the investment that has gone into technology around e-commerce, around distribution channels, around payment channels, and with what Afrexim is doing, for example, with PAPS, the Pan-African Settlement System, we expect that you would see a lot of investment going into companies in Nigeria to use them as a hub to drive expansion within the region.
But we've seen a whole lot of deals also in leisure and hospitality. For example, some of the biggest names are making a whole lot of inroads into that, building new hotels, sports across Africa, all the way down. Even Nigeria, we're also part of that. In fact, the report says we have one of the largest number of hotel rooms per hotel in Africa.
Absolutely. I mean, when we look at the reports, leisure coincidentally was one of the areas, was one of the sectors lagging. It attracted less than $200 million in investments. So other than the hotels, what really drives leisure is security. So when you see a lot of tourism going into UAE, for example, you see what's driving it. So the expansion in the hotels, the expansion in leisure activities is really coming from the footfall going into those countries in form of travel. When you look at Nigeria, that's really less. A lot of Nigerians want to travel abroad to spend their leisure time, and you have less traffic coming into Nigeria. So our ability also to expand, our ability to get our security challenges yes, would be able to drive
and
leisure
ramp up tourism.
And ramp up tourism. So I would expect that we'll see increased investments in leisure as we get our security measures in place. Another sector that coincidentally we expect to see more, but is also lagging, is agriculture. And that's really around insecurity. So when you look at where you have large-scale farming in Nigeria, a lot of it is also done in northern Nigeria. And when you see these insecurity challenges in that aspect of, in that part of the yes. But we need to get investments in that sector. So we really need to get our security measures again in place, because more so, the food sector, the agriculture sector is what is feeding the food value chain
consumer goods,
with respect to food processing and consumer goods.
Interesting. Thank you. I'm going to give you this. Thank you, madam. Short and sharp, straight from KPMG. Thank you so much.
Thank you.
It's nice having you.